What's up guys, FX Keys here. And in today's video we're doing a EUR USD breakdown. So this trade actually took 10 days ago, but I know I haven't uploaded anything on YouTube recently. I just haven't really been bothered to be honest with you. But this was a trade I took it on a funded account. So if we look at EUR USD on the 1 hour, we are on a nice uptrend, a very nice uptrend. And what we actually had was a range low down here and a range high up here. This was our range, and we had a pullback. You can see this would have been a gap. I'm assuming this would be over a weekend. Yep, this is a weekend gap. So we had a pullback, and then we had an impulsive move, pure imbalance, impulsive move, breaking the range high, and it actually closed above the range high. So meaning we have a whole new range now. We have a range low here, a range high here, but not just a new range. We actually have a valid setup. So like I said, we are on a nice uptrend on the 1 hour. If we go into the 4 hours as well, we are also on a 4 hour uptrend. So if I jump into the 4 hour for you guys, you can see we are on a 4 hour uptrend. The 1 hour uptrend is nicer, but we are on a 4 hour uptrend as well. We always want the higher time frame to be on the same trend as the time frame we're trading on. So yeah, we have a impulsive move, creating a new range high, new range low, imbalance, order block. We have a valid setup. So directly the last sell before the buy would be here. Direct imbalance, and we have a break of the range high. Now what we want to do is go down to a lower time frame to get the order block more refined. I know there's not direct imbalance on this sell candle, as there is a little bit of a wick to the right of it, but I do consider this the order block in these type of setups, because what we actually have on a lower time frame would be a sell. Like within this 1 hour candle, price was pushed down and then pushed back up, so we know there is a more refined order block within this candle by going to a lower time frame. And we will do this either way. We always want to refine the order block as low as possible so we can get the best entry. So we're going to just mark this one out, and now we're going to go down to the 30 minutes, see if we can get a better refinement. And right off the bat, we can clearly see the last sell before the buy. We've basically halved the order block size, and this one actually does have direct imbalance from the last sell candle. So this is a completely valid setup, and this looks really, really good, like really good of a setup. We have a really impulsive move to break the high. We have direct imbalance. We have a nice sell before the impulsive move. So this looks a really nice setup. But if you want to refine it more, the way I always do it is I kind of refine it as far as I can so I can get the most extreme entry. So I will go down to the 15-minute now, see if there's anything better. And there is not anything better. We can see this is the last sell before the buy, but the following candle, the actual high is a little bit higher up, so it's even worse of a setup. Let's go down to the 5. Now within the 5 minute, we actually can see there is a even more extreme refinement, which is right here. Direct imbalance as well. You can see there is a tiny little bit of imbalance. From here to here, from this high, this low, there is a little bit of imbalance. So we do actually have a even more refined entry. So you can go down to the 1 minute, but as this was 10 days ago, the 1 minute candle ain't even there anymore. I can't actually show you the 1 minute. So what I would be doing in this situation is I would just stick a long position right here on the 5 minute extreme order block. The 30 minute actually looked the best. So like if you're looking for most likely to trigger, I think it was the 30 minute. 30 minute looked really, really good. Yeah, right here. The whole setup looks amazing. Impulsive push. So for a setup that you actually want to trigger, this kind of looks like the best order block and the direct order at the top of this. But I like to enter on the most extreme. So entry would be placed right here. And now we always target the range high on an uptrend. So the take profit will go all the way up to the range high. And then a minimum of 1-to-1, and it must be below the range low. So it has to be below this low here. And the biggest stop loss we could have would be a 1-to-1. So right about here. For this trade, I actually put my stop loss. Let me go back to the 1 hour. I actually put my stop loss at 608, and I'll put the trade up on my screen. I took this on a funded account. This was, yeah, this was the stop loss. I think is that all right? There you go. All right, that was the exact stop loss. And now price actually did push up a little bit higher. There wasn't a real pullback, and like nobody closed above the high, so the high just got moved up. There wasn't actually a new range low, range high. The high just got moved up. So our take profit actually went up a little bit higher as well. So if we just play this out, you'll see what I mean. So here, it may look like a pullback and a break of the high, but the only way I consider it to be a pullback is, for example, you would have a sell candle, and then you have a wick, and then you need another sell candle, and the body needs to close below the previous low wick. So for example, this body close here would need to be down here. If this closed down here, then we got a pullback. But and again, also this high would need to be lower than this high. Then we got a pullback. But at the same time, even if we did have a pullback there, this wouldn't be a new range high because this only wicked above it. So if we had a pullback right here and then a new body close above this high, so this body closed up here, then we'd have a new range low here and a new range high here. But in this situation, all we do is continue to move the range high up. And with the range high going up, we can actually increase the take profit as well, and we can get even more R2R, or we could even lower the stop loss down even more. I didn't. The stop loss is very low right now. The range low is all the way up here, so we can delete this previous range high and range low. So the chance of it coming down here is slim. It's most likely we're going to get a trend change if it was to come down here. So this is like a good trade. So what we do is just continue playing it out and see what happens. I don't actually think that triggered in. I think it just may have missed it. But we are in now. And that, if I can remember correctly, when was this? This was a Thursday. Let me pause this. This was 1 p.m. GBP time. So this would be a news event. I'm not sure which news event this was, but this would have been a news event, that impulsive move down. And we continue to let it play. And there we go. Take profit hit. So this was a nice little 1 to 1.22 trade. You're not always looking for big trades. I never look for big trades. My trades aren't big trades. My trades are consistent winners. So that is how I trade. I'm looking to take a lot of winners, not one big trade and tons of losses. So yeah, hopefully this helps. Hopefully you enjoyed the breakdown. If you could implement it into your own trading at all, I don't know, but yeah, hopefully it helped. You can go and watch my other videos. Thank you for watching.